What happens when a hot real estate market finally starts to cool, but a new wave of buyers refuses to back down? That's the story unfolding in Calgary today. After years of bidding wars and double-digit price growth, the city's resale housing market is losing steam. Inventory is climbing, sales are slipping, and prices are softening. Yet one group remains surprisingly determined: young buyers, particularly Gen Z and millennials. While many markets across Canada are seeing younger generations sidelined by affordability challenges, Calgary's mix of relative affordability and lifestyle appeal is keeping first-time buyers in the game. So why are young Calgarians still active while the market cools? And what does this mean for the city's real estate future? Let's dive in. The cooling of Calgary's resale market. The latest July 2025 housing data paints a clear picture. Calgary's once red-hot resale market is cooling. Sales dropped. 2,099 resale transactions were recorded, down about 12% year-over-year. Listings surged. 3,111 new listings hit the market, boosting overall inventory by 66% compared to last year. Prices softened. The city's benchmark price fell 3.9% annually to $582,900. In simple terms, there are more homes for sale, fewer buyers closing deals, and prices adjusting downward. For sellers, this marks a sharp contrast from the frenzied years of 2021-2023, when homes often sold in days well above asking. For buyers, however, it's a long-awaited shift toward balance. Why the market is cooling. Several key factors are driving this shift. Higher interest rates. Even as the Bank of Canada considers rate cuts, borrowing costs remain much higher than during the pandemic. Mortgage affordability is stretched, reducing the pool of qualified buyers. Inventory catch-up. After years of undersupply, Calgary is finally seeing more listings, thanks in part to slowed sales and increased development. More supply naturally eases price pressure. Economic uncertainty. Inflation concerns, job market shifts, and national housing policy changes are making some buyers hesitant. Yet despite these headwinds, Calgary is still faring better than many Canadian cities, precisely because of its relative affordability. The role of young buyers. Here's where Calgary's market is unique. Gen Z and millennial buyers remain active. In many Canadian cities, first-time buyers have been priced out entirely, but Calgary's home prices, while rising over the past few years, are still significantly lower than those in Toronto or Vancouver. With a benchmark price under $600,000, Calgary remains one of the last major Canadian cities where young professionals can realistically enter the housing market. Why young buyers are holding strong. Relative affordability. A detached home in Calgary often costs less than a condo in Toronto or Vancouver. Strong job market. Calgary continues to attract young workers, especially in tech, energy, and professional services. Lifestyle appeal. Access to the Rockies, growing cultural hubs, and improving public transit make Calgary attractive for younger demographics. Migration trends. Interprovincial migration from more expensive provinces is fueling demand from younger families and professionals relocating for affordability and opportunity. For many, Calgary offers a rare chance to build equity in home ownership, while peers in other cities remain lifelong renters. What young buyers are buying data shows that younger buyers in Calgary are most active in more affordable property types, condos and apartments. With benchmark prices around $329,600, condos are the most accessible entry point. Oversupply in this segment makes it even more buyer-friendly. Townhomes, row houses, benchmark at $446,200. Row homes are popular among young families who want space without the detached price tag. Semi-detached homes. At $697,500, semis are less affordable but remain attractive to dual-income young couples. Detached homes remain aspirational, but many young buyers are starting smaller, choosing affordability today with hopes of moving up later. Opportunities in a cooling market. For young buyers, the cooling market presents opportunities not seen in years. More choices. With nearly 7,000 homes on the market, buyers don't have to settle for the first property they find. Negotiating power. Gone are the days of 20-offer bidding wars. Young buyers now have leverage to negotiate on price, conditions, and even closing costs. Softening prices. A 3.9% annual decline may not sound like much, but it signals a more buyer-friendly trajectory, especially in condos and townhomes. Reduced rent pressure. With average rent dipping 9% year-over-year to $1,914, some renters may be able to save faster for down payments. For young buyers with stable incomes and financing in place, July 2025's market conditions may represent a rare window of opportunity. Risks young buyers face. Of course, there are still challenges. Rate volatility. If rates don't come down as expected, affordability could remain stretched. Job market shifts. Calgary's economy remains tied to energy. Downturns could impact younger buyers disproportionately. Short-term price declines. While long-term prospects are strong, buying now could mean short-term paper losses if prices dip further. Still, many younger Calgarians are taking a long-term view, focusing on stability and building equity rather than short-term gains. Sellers and the youth factor. For sellers, younger buyers represent both hope and a challenge. On one hand, they keep demand alive in a cooling market. On the other, they are price-sensitive and less likely to overpay. Sellers targeting young buyers need to price competitively rather than relying on pandemic-era highs. Highlight affordability with lower maintenance fees or energy-efficient features. Market lifestyle perks, such as proximity to transit, work hubs, and recreation. Understanding this demographic is key to selling successfully in today's market. Looking ahead. So, what's next for Calgary? The cooling trend may continue through late 2025 as high rates and rising supply weigh on prices. But long-term, Calgary remains a magnet for young buyers seeking affordability, lifestyle, and opportunity. If the Bank of Canada cuts rates in late 2025 or early 2026, demand could rebound quickly, especially from younger buyers who are already positioned to act. Final thoughts. Calgary's resale market may be cooling, but it's far from collapsing. Rising supply, fewer sales, and modest price declines point toward a healthier balance. Yet unlike other markets, Calgary continues to benefit from one powerful force: young buyers refusing to sit on the sidelines. Their resilience underscores Calgary's unique position in Canada's real estate landscape, an affordable, growing city where home ownership is still within reach for the next generation. So, what do you think? Are young buyers keeping Calgary's market alive, or will high interest rates eventually push them out too? If you're a first-time buyer, are you planning to jump in now while prices soften, or wait to see where the market goes? Drop your thoughts in the comments. I'd love to hear how you see Calgary's housing future shaping up.